Good morning, everyone, and welcome to this fast track revision batch for Jan'25 exams. Of course, if you are writing in the subsequent attempt, also it is worth watching this. So the idea is in the next about 50 to 60 hours over a period of 20 to 25 days, we will revise advanced accounting thoroughly. Now, advanced accounting is important because this is your first paper and it can be a highly scoring paper which can compensate if at all you do tend to score less marks in theory. I hope my audio and video both of it is very clear. If you have any issues, please drop in a comment and I'll have a recheck at my end. Right now, the idea of this revision batch is few things. The objective that I am starting this batch with is first thing is to target exemption. Now, sir, why are we targeting exemption? Why are we looking at the 60 plus marks? Please understand, our passing marks is 150 out of 300, and all of us know, I'm talking about group 1, and all of us know how difficult it is to score good marks in law. A paper like law, which is theoretical, it becomes difficult. And yes, income tax and GST can help you to some extent, but if the first paper, if my opening batsman itself can give me good score, I will be able to focus better on the remaining papers and I can succeed in the examination. That is the objective. And a lot of you who find this paper to be slightly difficult or the paper to be complex, I will tell you some topics where we can score full marks. So for example, there will be some topics, I'll be giving you a list of that. Full marks can be scored in most of the questions which are asked from those topics. So that is what we're trying to see, how to master high scoring chapters. Now sir, what are these high scoring chapters? Let me show you the list. Let me show you the list. Chapters like AS2, 10, 12, 16, 26, 7, 13, 17, 20. Now these are some chapters which are highly scoring. When I say highly scoring, you can go back and check past exam papers and you will see that if there is a question on inventory, most of the questions you can score 5 out of 5 or 6 out of 6. There will be one odd question which will be difficult, but you will be able to score, right? Then you look at chapter like AS10, 12, 16. In all of these, there is a set part of the standard where you can score out of out. And our focus should be to master those questions or master those problems. If there is any unique question, now for example, in property, plant and equipment, I don't expect a very unique kind of question that will be tested in the examination. Okay, more or less you will have questions coming from past patterns or the study material or the RTPs or the NTPs. One odd case we may face difficulty, but we will be able to manage that. Sir, why are we not including leases or employee benefits or contingent liabilities or even things like let us say contingency and all? Here there is a chance that you will get theoretical questions where you have to write in theory. There will be interpretation issues there. So here in these chapters, it is not easy to score out of out, but in all these chapters that I have listed and financial statements and cash flow statements, even in these two chapters, these are high scoring. And to your surprise, you will be surprised to know in amalgamation, internal construction and consolidation, these are also highly scoring. Sir, but these are the most difficult chapters as far as CA intermediate is concerned. I know these are considered to be difficult chapters, but there is a trick. If you follow it rightly, out of 14 marks, nowadays they ask for 14 marks, scoring 8 to 10 marks is easy. I'll tell you, in a question like consolidation, just by combining two balance sheets, you can score 2 to 3 marks. Okay, just by combining the balance sheet given in the question. So what is our idea? If I have to score 60, that is what I'm putting as my target. Don't get scared of these chapters. I will give you tips, I will give you tricks to ensure that out of 14 marks, 8 to 10 marks is in your pocket. That is one thing you have to keep in mind. So these standards which I have marked will focus to ensure we get great clarity and get great perfection with practice so that you can write the examination. Second thing, MCQ score. This is where we should aim for maximization. Maximization of MCQ score. What I mean is, if you look at the recent attempt paper, that was the September 24 attempt paper, out of 30 marks, 20 marks was easily attainable. 20 marks was easily attainable. You can go back and look at my video the day I did it, on the examination day. After that, I had given out the solution. If you look at it, 20 marks was attainable, right? So if I get 20 here, then in consolidation, if I can target 8 to 10, in preparation of financial statement, if I can target 8 to 10, right? Then remaining standards, I can target 20. This will give my breakup of 60. This should be my approach to appear in the examination. This should be my approach to focus in the examination. Before I move further, if you have any question, those of you who are watching on YouTube or those of you who are watching on Zoom, if you have any question, you please put it down. Or if you want me to cover specific chapters, if you feel that some specific chapter is more difficult, we can spend more time, and it will also help us to score better in the exams. The other thing is, this entire class, whatever I'm doing for the next 20-25 days, will focus more on exams than on logics and concepts. Of course, I'll give you some logic, some concept, but don't expect that everything will be taught in detailed logic. If that is your intention, then this is not the class for you. If you want to learn everything in detail and with lots of logic, then you have to go for the main classes. This is purely an exam oriented revision class. Okay, so let me check if there are some questions here, and then we can start. Just a moment. Yeah, okay. Someone is saying volume is low. Let me just slightly increase the volume. I hope it gets better now. I have increased the volume slightly. Is this for free? First 2 days we'll be streaming it on free, and if you want to continue after the first 2 days, you can enroll for the classes. And so there are a set of students who are doing, already attending live, and there are a lot of students who want to have a backup of it, so they'll be watching in the recorded mode. It is purely up to you. Have a look at for the next 2 days. If this suits your requirement, we can go ahead and you can enroll, right? So now this is done, and I have told you some chapters we'll be focusing on. So today we'll start our first class with the standard accounting standard 2 on inventories. So why are we not starting from AS1, or why are we not starting from applicability and non-applicability? Those we can do it towards the end. We'll go in a logical sequence. We will do related standards together, and gradually we'll take up the difficult standards. Okay, right from day one itself, if I take up a very difficult standard, all of you will run away. Okay, so that is not the intention. The intention is that you should be able to get the maximum benefit out of it. So we'll take related standards. For example, we'll start with AS2, then we'll follow it up with AS10, AS10, then we'll go to AS26. These three are related standards. Then we will do AS12. So like that, in a sequence, in a logical order, is what we will be covering. Notes, you can download it from the resources section on our app and website. Enrolled students will be adding all the notes in your course profile, so you can access it from there. Okay, right. So if there are any more questions. Sir, can I attend this class without attending the main class? I suggest you to observe for 2 days, okay, because this is a revision class, and then you can attend. Right now, without wasting any further time, let us start. AS2 covers, all of us know, inventories. Now, inventories if you look at the structure of, I'm drawing a T shape so that you are able to follow. P&L and balance sheet, right? Inventory plays a very important role. We all of us have been using the term closing stock on the credit side of P&L, opening stock on the debit side of P&L, and we have a balance sheet item called closing stock on the asset side, right? Now this is now what we will term as inventory. When you prepare P&L as per the schedule 3, you will not say closing stock, opening stock, you will simply say change in,
here's what I found.
Oops, sorry.
The Cubs lost in 10 innings to the
change in inventory. So this becomes a very important part of our financial statement, not only at intermediate level, in days 2, that is at the final level also is very, very important. Now what is inventory, or what we normally refer to as stock? Inventories are assets. So this is important from MCQ. If at all they ask a theory MCQ, this becomes important. Inventories are assets, means what are assets? Can someone put down the definition? What are assets? Assets are resources which are controlled by the entity and which will give us future economic benefits. So inventories are assets, they are assets, they are resources that we control and they will give us future economic benefits. And the standard divides inventories into 3 categories. 1, held for sale in the ordinary course of business. Now held for sale in the ordinary course of business, this refers to your finished goods. For example, if I am a computer seller or I have a showroom where I sell computers, I buy computers, I sell computers, that becomes my finished goods and it is covered and it is called as inventory. Now the distinction that you need to understand is that I am a computer dealer. I am a computer dealer. This distinction you must understand very carefully. And I have computers which I buy and sell. And I have computers which are used by my accounting team. So there are 2 types of computers. One computer I buy and I sell. Also I have computers which is used by my accounting team. Now tell me, if this is A and if this is B, out of A and B, can I say both of them are inventory? Can I say both of them are inventory? I cannot say, because only for buying and selling purpose, whatever is there, this is covered by accounting standard 2, inventory. The one which is used by the accounting team, this is covered by accounting standard 10 on property, plant and equipment. This becomes my fixed asset. So even though I am a computer dealer, but I am using computer for the purpose of my business, I will say that this is my property, plant and equipment. Whereas if I buy and sell computers, the computers which I have bought and sold, that is called PPE. That is called PPE, right? So A is, as you rightly said, A is stock, B is fixed asset or property, plant and equipment. So first one, finished goods which are held for sale in the ordinary course of business. If we sell fixed asset, a lot of time it happens that old fixed assets are sold. Can I say that those old fixed assets are my inventory? I cannot say that. They have to be in the ordinary course of business. Sir, why are you emphasizing so much? I am emphasizing because MCQ question can be attested on these basic concepts, right? That is the first thing. Then, in the process of production for such sale, so I have taken some raw material, let's say I am a cement manufacturer, I have taken some raw material, I have put that into the production process. So whenever it is being produced, that we call it as work in progress, that also is my inventory. Then, in the form of materials or supplies to be consumed in the production process, meaning to say, if I have raw material, this raw material will be used to produce finished product, that is also called inventory. So there are 3 categories when we say inventory. We have raw material, work in progress, finished goods. In examination, if a question comes, calculate the value of inventory, then you should take raw material, work in progress, finished goods, all put together, we will do the valuation. Now, as far as this standard is concerned, the questions generally ask us to compute finished goods and raw material, and here we will subsequently understand an important concept called replacement cost. Okay, so this is the introduction of what is an inventory or what are the different categories of inventory. Examination, as I told you, is focused more on valuation. The golden rule, I call it the golden rule, inventories are measured at lower of cost and net realizable value. So cost, net realizable value. For example, if I purchased a computer at 10,000, this 10,000 is my cost. Today in the market, the net realizable value is 9,000, then you will measure it at lower of cost and net realizable value. That is 10,000 and 9,000, whichever is lower, you will measure it at 9,000. Okay, sir, how to compute NRV, how to compute cost, we are coming to it subsequently. But this is one thing you have to understand. Inventories are measured at lower of cost and net realizable value. Now, raw material is measured generally at cost only. Generally, raw material is measured at cost. There is an exception which we will come to it in the subsequent discussions, right? Then, how to compute cost of inventories? How do we compute cost of inventories? One principle that you can keep in mind is that all the costs which are incurred to bring the inventory to its current condition and location is included in the cost. That is what you have to keep in mind. For example, if I purchased computers, I paid 10,000. Then I incurred, let us say, transport cost of 500. Then I incurred some unloading cost of, let us say, 200. All this put together, 10,700 becomes my cost. So when you are measuring cost, we have to include certain components in the cost. This is what you have to remember. Many questions are asked based on this concept. Okay. Now, what is included in cost? Cost includes purchase cost, conversion cost, and other cost. Now, what is purchase cost? Whatever amount you pay to the seller is included here. That is your cost of purchase. Apart from that, if you have incurred some amount in, let's say, transportation, insurance, transit insurance, unloading, loading, all of that, till the time the goods have reached your warehouse or till the time the goods have reached your godown, all of that is included as a part of your cost of purchase. Okay, so what are included? Purchase price, whatever amount you pay to the seller. So this will be given to you in the question. We'll do some questions where we'll see what is included in the purchase price. Then duties and other taxes. Any duty and other tax which is included as a part of purchase should be included. Now tell me one thing, should I include all the duties and all the taxes, or is there any exception? Should I include all the duties and taxes, or is there any exception? There is an exception. If it is a refundable duty, that is on which, let us say, you can claim input tax, input GST, which you can claim credit of. If it is refundable, then you will not include. If it is non-refundable, please keep this in mind, it will be included. Now, institute is very smart in asking questions. What they will say, cost including GST 10,000. This means 10,000 includes GST, so you have to reduce that. Or in other cases, they will simply give cost, on that you have to calculate GST, right? So import duties and taxes, make a note of it. If it is your refundable thing, you will not include. Sir, why we will not include? We will not include because for that you will take a credit, you will set it off against your liability. So that's why you are not including, right? Then transport and handling charges, loading, transportation, unloading, all of that. Any other cost to bring inventory to present location and condition, that is also included. And you will exclude trade discount, rebates, and similar items. Now here you need to understand, when it comes to discount, there are two types of discount, trade and cash. Trade discount is negotiated at the time of purchase. Cash discount is for prompt payment. Cash discount is for prompt payment. If it is negotiated at the time of purchase, this discount is reduced from the cost. You will subtract trade discount from the cost. But cash discount, which is for prompt payment, you will not reduce it from the cost. Now, don't mix GST angle here. In GST, you see that even for discounts which are negotiated and which are cash discount, in some cases you may reduce from value of supply. But here, only the trade discount will be reduced. So if the supplier gives me some discount, take this 10% discount, take this 5% discount, that discount I will reduce. Clear? All right. So this is my first set, which is the cost of purchase. I will include purchase price, non-refundable duties and taxes, transportation charges, loading unloading charges, any other cost to bring inventory to the current condition and location, whereas I will not consider trade discount and other similar items. Right? Then this is cost of purchase. This is for your raw material. Next thing is cost of conversion. Now, cost of conversion is applicable when I am valuing work in progress or finished goods. Generally, the question in Accounting Standard 2 does not test on work in progress. They test on raw material and finished goods. Now, cost of conversion means all the cost to convert the raw material into finished goods is called cost of conversion. So, you have direct labor, any other direct cost, and overhead, which is fixed as well as variable overhead. So, what you learn in costing, right? All of that cost of conversion is included while calculating cost of finished goods. Now, fixed overhead is where we need to understand further. Fixed overhead. What are fixed overhead? Fixed overhead are those overhead which do not change based on output. Fixed overheads are those overheads which do not change based on output. Right? So, say for example, rent of factory. The rent of factory will not change based on my output levels. This is called fixed overhead. Now, I am not incurring this on a per unit basis, whereas your raw material, your labor, your other direct cost, you may be able to relate it on a per unit basis. For example, labor cost 50 rupees per unit or 50 rupees per hour. So, there you are measuring on a per unit basis, whereas when it comes to fixed overhead, you are not measuring or you are not incurring it on a per unit basis. So in that case, how do we do the valuation? What we do is we calculate something called as predetermined overhead recovery rate. We calculate predetermined overhead recovery rate. Now what does that give us? What is our budgeted fixed overhead divided by what is our normal production? What is our budgeted fixed overhead? What is our planned or normal production? This will give me ORR. What is this ORR? Overhead recovery rate. Once, for example, rent of the factory is 1,20,000. I am expecting 10,000 units. So, 12 rupees per unit becomes my overhead. 12 rupees per unit becomes my overhead recovery rate. Now, sometimes what happens is, we thought we'll produce 10,000 units, but we actually produced 12,000 units. If the actual, please keep this in mind, if the actual production is more, than the planned production, we will recompute ORR. Sir, what is the meaning of recompute ORR? Then we'll say 12,000, 1,20,000 divided by 12,000, we'll say 10 rupees per unit. If actual is more, then we'll recompute ORR. If actual is less than or equal to planned production, then we'll use the predetermined ORR. This is a tricky thing which sometimes gets tested in the examination, right? Now, that is one thing. What we'll do now, we'll quickly finish NRV and then we'll take up some questions, okay? Net realizable value means what is your expected selling price? So say for example, I sell my computer at 10,000. So my expected selling price is 10,000 minus if there are any estimated costs to complete. So for example, if there is a work in progress, I have to incur some 10 rupees or 15 rupees to complete that. that is included in cost to complete and cost to sell. Say for example, for every computer, I have to pay 5% commission. So 5% commission would be 10,000 of 5% of 10,000 is 500. So this is my commission. This is my estimated selling price. And here I'll take estimated cost to complete. The question will clearly tell you that this is the estimated cost to complete and this is the estimated cost to sell. As far as estimated cost to sell is concerned, you may have things like sales commission. The question will say for every sale you have to pay some amount of sales commission. So anything that is given for completion purpose or for completing the sale purpose, you will reduce that. Now there are Institute is smart. They will directly give you net realizable value. Please keep this in mind. They will directly give you net realizable value and they will say 5% commission. They'll give you net realizable value and they'll say 5% commission on sales is payable. A lot of students I have seen, they do the mistake that they will take the NRV, on that they will further reduce this 5% commission. Please remember, if the question has given you net realizable value, the question has given you net realizable value, you will not recompute the NRV or you will not deduct the commission. Right? I hope this part is clear. I hope this part is clear. Any more questions? Yeah, no questions. So that is what you have to keep in mind, right? Now what we'll do, these are other costs which are included to bring the inventory to its current condition and location that you will include, that will not be tested anyways, right? Now, let us look at some questions. Simple questions. What I'll do is, after this set of questions are completed, we'll take a couple of past exam actual questions so that you get comfort. And whatever questions I'm not discussing in the class, I expect you to go back and complete it as a homework. Please do that. Okay. Otherwise, if whenever I teach, you will find that yes, sir has taught, I have understood everything. I'll go and write the exams. That will not work. After I have taught, you have to go back and you have to practice more questions so that you get a grip. If you follow this on a day-to-day basis, your advanced accounting problem will be solved mostly by the end of December. So you'll be 100% ready for the examination. Let's look at this one. I'll start with basic illustrations, then I'll move to advanced illustrations, and then we'll also take up one or two past exam RTP questions to give you more confidence. Now, these kind of questions, they can ask for MCQ also. Okay, they can ask for MCQ as well, so please keep in mind. Cost of partly finished unit at the end of 1617 is rupees 150. So they're saying work in progress cost is 150. The unit can be finished next year by a further expenditure of 100. So 150 is the WIP. You will incur another 100 rupees in the subsequent period. Finished units can be sold at 250 per unit, subject to a payment of 4% brokerage on selling price. What value of the inventory is to be determined. Now what they're saying, this 250 is my estimated selling price. 250. Don't write shortcuts in the exam, write fully. Selling price 250. Then we need two things. One is cost and another one is net realizable value. What is cost? Cost is 150. Cost that has been incurred is 150, right? This cost we have to compare with net realizable value. Now what is net realizable value? Selling price minus cost of completion minus selling cost or expenses. Cost of completion they have said 100. So if I sell this product at 250 and I have to incur 100 rupees extra, so this 100 I will reduce, because after incurring 100, what I will be left with? Only 150. That is the logic. Then I have to incur a selling expense. What is the selling expense? They have said 4% on 250, that is 10. So 250 minus 100 minus 10 will be 140. This is my NRV. This NRV I will compare with the cost. What is the cost given? Cost given is 150. NRV is 140. So you will value it at lower of 2, that is 140. Okay. Now students have this doubt, sir, how much should we write? Should we explain theory? If this question is given for 4 marks, If this question is given for 4 marks, how the breakup will be is, for working note you will get 1 mark, for this calculation you will get 2 mark, and by writing this theory you will get 1 more mark. Okay, that is how the breakup happens. So if it is a very small question for 4 marks or 5 marks, explain some amount of theory. If it is a very long question, then even if you don't explain the theory, no problem. Okay, I hope it is clear. So here we saw how to calculate NRV in case of a partly finished product. Okay, this we have already discussed, but a quick recap. They have planned to produce 1 lakh units per annum, and the expected fixed overhead is 18 lakhs. Determine the amount of overheads to be allocated to the inventory in the following cases. 1 lakh is the output, 90,000, 120. Always remember, if the planned production or if the actual production is more than the planned production, you will recompute. So if it is 1 lakh, in the first 2 cases you will use ORR which you had predetermined. In the next case you will do recomputation of ORR. Sir, what is ORR? ORR is fixed overhead divided by budgeted output or normal output. What is the fixed overhead? 18 lakhs. What is the planned output? 1 lakh. So 18 lakhs divided by 1 lakh. How much is this? 18 by 1, you get 18. Right? 18 lakhs by 1 lakh, you get 18. Now what is the question? The question has not told us compute the ORR. The question has told us determine the amount of overheads to be allocated to the inventory in the following cases. How much of overhead should be added to inventory? So a lot of time what happens, students, they will calculate 18, or in this case of 120 they will say 18 lakhs divided by 1,20,000, and they will say answer is 15, and they will leave it there and they will not get full marks. That is what you should be careful about. The question has said amount of overheads to be allocated to the inventory. So if it is 1 lakh unit, 1 lakh into 18, you have to say 18 lakhs will be allocated. If it is 90,000, 90,000 into 18, 16 lakh 20,000. Sir, what happens to the balance overhead? Balance will be charged to P&L. Balance overhead will be charged to P&L. Then, if the actual production is 120, we have to recompute ORR. If actual production is higher, the recovery rate is revised. That is 18 lakhs by 1,20,000, 15 per unit, overheads allocated, 15 into 120, 18 lakhs. Always remember, the allocation of overhead should not be greater than what you have actually incurred, right? So that is the whole idea or whole objective of this particular part. Then we said we will value at cost or NRV, whichever is lower. This has to be done on item by item basis. Item by item basis means you have to take each item and do the calculation. You cannot do it at the totality level. For example, if cost is 50,000, NRV is 45,000, lower of 50 or 45, 45,000 is the value. 20,000, 24, 20,000 is the value. So the value will be 65,000. Don't add different inventories. Don't add different inventories and say, sir, 70 or 69, we'll value it at 69. No, you have to do it at item by item level and not on a global basis. This is the keyword. Should not be valued on a global basis, but should be valued on item by item basis. Is it clear? Any questions so far? No questions? Sir, please start in Hindi. Sure. Maybe after 4-5 months, we will think of that. So this is the keyword I told you. Write down of inventory should be done on item by item basis and not on a global basis. Few things what you have to keep in mind. NRV must be based on the reliable evidence available. Events occurring after the balance sheet should be considered to the extent they provide additional evidence existing on the balance sheet date. Now this we will learn in when we talk about prior period items, events occurring after the balance sheet date and all of that. There will focus more on what is the meaning of this condition. So what it basically says is future information should be taken if they provide additional information of or additional evidence of events existing on the balance sheet date. So you have this existing event and non-existing event. That is when we will cover this. Price reduction in future should not be considered. You should not consider price reduction in future. So for example, on 31st March, NRV was 100. Subsequently, the price fell down. That should not be considered. And if it is held for a firm contract to sell, contracted price can be an evidence. Meaning to say, the company already has entered into a contract with another party for selling. That rate can be taken. Okay, these are all important for MCQ purpose. Now, having covered the first introductory part of inventory, there is another concept which is very important, which is joint product and by product. Joint product and by product. A lot of times, institute has been asking on this particular area, especially the computation part. So, what is this joint product and by product? To give you a simple example, if you have crude oil, if you have crude oil, using this crude oil, if you put it through a refining process, you get LPG, you get diesel, you get petrol, you get kerosene oil, and then you get tar. You also get other oil, furnace oil and all of that. I'm not putting all of them. Now, a single product or a single raw material or a single group of raw material, when they are put through a process, when you get these multiple products which are of equal importance or of significant value are called joint products. They are called joint products. So, from crude oil, you have items like LPG, diesel, petrol, kerosene. These are of great value. Tar is not of great value. This is more like a residue. These are called joint product. Tar, if it is of significant value, then of course you can call it as joint product. But normally this is your residue, or you can call it a scrap. This is called a byproduct. So the main products are called joint products, and the residue scrap which is left over is called byproduct. Okay. Now, what is the tricky thing, or what is the most important thing about this, joint product and byproduct? That is cost of crude oil and the process. Cost of crude oil and the process. How should you allocate between these different types of product? That is what we need to understand. Okay, so we have this joint product, we have a byproduct. How will you allocate the cost? That is what we are going to understand in this particular, topic. So now, there is something called as a joint process. Means where the crude oil has been put into the refining process, and from a particular point you can see different products which has come out. So you have LPG, you have diesel, you have petrol, you have kerosene and all of those things, right? This point is called split of point. This point is called split of point. Split of point means the point from which the individual products can be identified. That is called the split of point. Now our discussion here is the process cost. The cost of this joint process, how should we allocate between the main products, that is the joint product, and the byproduct? That is what we are going to understand. Very important point, a question from the point of view of examination. We will do a couple of more, questions also from the actual examination. And highly scoring. So you can easily score 5 out of 5 in this question. No doubt at all. Okay. Joint product. 2 or more products produced from a single process using common inputs. So there is a common input and 2 or more products have been produced from a single process. The process is also common. Each product has significant value. Joint costs are allocated on the basis of relative sales value or NRV at the split of point. We talked about split of point. At the split of point, what is the net realizable value of each of the product? I am repeating. At the split of point, what is the net realizable value of each of the product? On that basis or in that ratio, we will allocate the joint cost. How will we allocate again? What is the NRV at the split of point? We will calculate that and we will do the allocation. Okay. If NRV at the split of point cannot be calculated directly, we can take the final selling price and work backwards, right? Byproduct is secondary or incidental product in the process of manufacture which have an insignificant value which is also considered as scrap. This is considered as scrap. NRV of byproduct is reduced from the joint cost if the byproducts are immaterial. If the byproducts are material, they can be considered as joint product, right? So now, what we'll do is we'll take a question. Yeah, this is very important question. Very important in the sense because as I have corrected papers, I have set papers, almost every 2-3 attempts one question comes like this. As it and they test this at a final level also. Okay. In a manufacturing process of Vijay Limited, one byproduct BP emerges besides two main product MP1, MP2. So you have MP1, you have MP2, and you have byproduct. Details of the cost of production process are here under. Raw material 15,000 units, 1,60,000. Wages 82,000. Fixed overhead 58,000. Variable overhead 40,000. What is this? This is the cost of production process or the joint process. Product MP1, MP2 and byproduct. 6250 is the unit given. Closing stock is 800 and 200. Now please remember this is a byproduct. Average market price of MP1 and MP2 is rupees 80 and rupees 50 respectively. So MP1 is sold at 80, MP2 is sold at 50. Byproduct is sold at 25. So this BP is sold at 25. There is a profit of 5,000 on sale of byproduct after incurring separate processing charge of rupees 4,000. So the byproduct, when you sell that byproduct, you are making a profit of 5,000 after incurring separate processing charge of 4,000, packing charge of 6,000. Rupees 6,000 is realized from sale of scrap. Now here is where you have to pay extra attention. Sir, where did this scrap come from? Is not the byproduct a scrap? So there are two things here. One is complete scrap. One is a complete scrap. Second one is a byproduct. So by selling scrap, you have realized 6,000, and by selling the byproduct, when you have 1,600 units, there you made a profit of 5,000 after incurring separate processing charge of 4,000 and packing charges of 6,000. Right? Now, how to handle this question? First thing you have to understand, whatever is the joint cost given, the cost of your byproduct and scrap, you should reduce from that. You have to reduce the cost of the byproduct and scrap. Sir, can we not take it as other income? Generally, unless the question mentions, don't do that. Okay. So here, what you have to understand, first, what is the joint cost? Joint cost is raw material, wages, fixed overhead, variable overhead. 1,60,000 raw material, wages 82,000, fixed overhead 58,000, variable overhead 40,000. This is my total joint cost. This is my total joint cost. Now, this 3,40,000 of joint cost. From here, I have to reduce scrap and byproduct. Now, if you see here, they have tried to confuse you. Byproduct selling price is 25. What we have to see is what is the net realization from the byproduct? 1,600 units into 25. So 25 fours are 1,000. 25 fours are 1,000, right? So 1,600 into 25. So 25 into 400 is 10,000. 40,000. 40,000. That is, I think I've done it rightly. Yeah. 1,600 into 25 is 40,000. Then from this, whatever extra charges you have incurred, 4,000 and 6,000, that extra charge we have to reduce. So basically what are you trying to say is, what is my net realization from byproduct? What is my net realization from byproduct? So my net realization is 40,000 minus 4,000 minus 6,000, 30,000 and 6,000. So 340 minus 36 of scrap gives me 3 lakhs 4,000. This is my joint cost which I have to allocate between the main product MP1 and MP2. On what basis? We have to do it on the basis of NRV at split of point. They have not given us NRV at split of point. In that case, if that information is not available, we can use the sale price or the final sale price. Sir, how to calculate NRV at split of point? NRV at split of point is NRV at split of point is final selling price minus cost to complete minus cost to sell. If they give subsequent processing cost, subsequent packaging charges, subsequent selling prices, all of that you will reduce and arrive at NRV at split of point. If this information is not available, you can take the relative sales value at the final point. Okay. Now, they have said 6250 and 5000. So please remember, when we say net realizable value or sales value comparison, we'll do for production units. Don't say, sir, 6250 minus 800, on that basis we have to split. No, you have to see what is the total value of my joint product. Got it? So 6250 multiplied by 800, 5000 multiplied by 200. So what happens is 6250 multiplied by, oh sorry, not 800. See, in a hurry makes bad curry, so don't do this. 6250 into 80 and 5000 into 50. So 6250 into 80, 5000 into 50. So this will give me 5 lakhs and 2,50,000. So what I have to do is, whatever is the joint cost that I have calculated here, this has to be split between these two in the ratio of, now you can calculate it any way you can. One is, you can say 5 and 25, you can do 2:1 if you are comfortable doing it, or you can say 5 lakhs divided by, so this total is 7,50,000, 7,50,000 multiplied by 3,04,000. If you do this also, this is 2, this is 3. So I can do it in the ratio of 2:1, that is 2/3 here and 1/3 here, or I can do the full calculation and you will get 2,02,667 and 1,01,333. You can do the calculation. This is a basic ratio calculation, right? Then after I have done it, what is the per unit cost? Total cost divided by total production, 32.42, total cost, total production, 20.26. Then closing stock, 800. You will multiply this by 800 and you will multiply this by 200. And then you will see the closing stock valuation is so much, right? So detailed working, they can give this for about 6 marks in the examination. Sometimes they have given it for 5 marks also. But very important question, you have to understand and follow this logic for the examination purpose. So what did we do? When it comes to joint product, what did we do? We took joint cost. From the joint cost, we reduced net realizable value of byproduct, net realizable value of scrap. So this will give us joint cost to be allocated. This joint cost will be allocated between main product. So in case main product 1 and main product 2 in the ratio of what? Either NRV at split off or sales value. In this ratio, you will allocate the cost, right? So that is how you will handle a question based on joint product and byproduct. Any questions? Hope it's clear. Okay. Then this cost formula is important for MCQs. Okay, very important for MCQs. They can ask directly. They can ask directly that, okay, how do we value in this particular kind of case? So try to remember this. Right? Now, when we say cost formula or valuation methods, the standard prescribes 2 broad categories. What are the 2 broad categories? First one is inventory ordinarily not interchangeable. Now, what is the meaning of inventory ordinarily not interchangeable? Means I cannot change one inventory with another inventory item. For example, say you have ordered a customized bed. You have ordered a customized bed as per your requirement, as per your room. Now that bed, the whoever is manufacturing that bed, can they replace that with another bed? They cannot do it because each bed is customized. Or if you look at a lot of this construction contracts, right? Of course, construction contract is valid separately, but I'm just giving an example. Construction contracts. Now, when you talk about construction contracts, also there also you can it's a specific project. You cannot change one project with another project. That is the other thing. Then what is the meaning of inventory ordinarily changeable? I have an iPhone. Now, if I have an iPhone, let's say I have an iPhone, a particular model. Let us say I have an iPhone 15. iPhone 15, there are lakhs and lakhs of iPhone 15 that can be ordinarily interchanged. Interchange means you can switch from one iPhone to another iPhone. You can give another iPhone in place of the first iPhone. That is called interchangeable. If it is not interchangeable, you will use specific identification of cost. Meaning to say, if there is a project that is being executed, or if there is a furniture work, which example I gave you, there what you will do is, whatever is the cost incurred for that particular bed, you will include all the cost. You will include all the cost and you will calculate the cost accordingly. You will not say that I have incurred, or you will not say that, for example, expenditure on wood was 1 lakh. Beds, different types of beds. Number of beds are, let us say, 10. You will not say 10,000 is the cost per bed. That is not what you will do. What you will do is, for this bed, how much would have I spent? That amount you will capture, and that is called specific identification of cost, right? Then, if the inventory is ordinarily interchangeable, in the case of, let us say, fast moving consumer products, computers, mobiles, which can be easily interchanged, in that case what you will do is, you will take either historical cost basis or non-historical cost basis. Under historical cost, we have FIFO and weighted average. And under non-historical cost, you have standard cost and retail method. Now, what is FIFO? FIFO method says first in, first out. FIFO says first in, first out. Weighted average is basically taking average of all the cost. So, we'll take one example so that you understand. If let us say purchase, on the purchase side, date 1st of January of 25, quantity 100, rate 50, amount 5,000. Then you purchased on, let us say, 14th January of 25, another 100 quantity at, let us say, 40, cost is 4,000. Then what you did, sold on 15th of January, on 15th of January of 25, let us say you sold 50 quantity, right? Now, when you sell this 50 quantity, the first in, first out method, what it assumes is the first rate or the first purchase is being sold first. So, cost for the purpose of these goods which are sold on 15 January will be considered to be 50. So, 50 into 50, 2500 will be the cost. And when you value the inventory, you will say, we have total of 200, out of 250 is sold. So now what you will do is, inventory will be 50 units from this into 50, 2500, and 100 into 40, 4,000. So inventory value will be 6,500. So the assumption is, whatever has been purchased first will be sold first, and the goods that are lying in your inventory are from your latest purchases. Means whatever has been purchased last will be shown in inventory. Whatever has been purchased last will be shown in inventory. In other words, to calculate inventory, you will move backwards. First you will take this, then you will take this. That is called FIFO method. So then what is weighted average method? In weighted average, what happens is, in the same case, if I add weighted average, in weighted average what happens is, you have 5,000 plus 4,000, total is 9,000. Total units is 2,000. So, weighted average cost is 45. 9,000 divided by 2,000, sorry, not 2,000, 245. Weighted average cost means total cost divided by total units. You get weighted average cost, which is 45. Right? Now, this 45, what you will do is, when you sell the product, so this is under FIFO. This is under FIFO. Under weighted average cost method, what you will do, when you sell 50, the cost will be considered to be 45. So cost will be 50 into 45. 50 multiplied by 45, that is 2250. Okay, and inventory will be 150 into 45, that is 2250 into 3, so 6,6750. So that is the difference. That is the difference. What is the difference? Here you calculate a weighted average, and cost of goods sold will be considered using weighted average, and closing inventory will also be considered using weighted average. I hope it is clear. That is how you will do the calculation. Okay. Now this is more tested in costing than in accounting, so no need to worry about it, right? If you have understood the concept, it is more than sufficient, and you will be able to handle the questions in the examination. So FIFO, cost flow assumption is inventory purchased first is sold first. Goods in the inventory are valued using the latest rate. So whatever has remained, whatever has come in the last, that is what will remain here. Weighted average, you use a weighted average rate of goods received. Now this can be periodic weighted average or moving weighted average. Now what is the meaning of this? Periodic weighted average means I will take the purchase of, let us say, entire month and calculate a weighted average rate. Moving weighted average means after every purchase I will change the average rate. So as soon as a new purchase happens, I will increase the rate. Then sale happens, again a purchase happens, again I will change the rate. So on a continuous basis, if I update, that is called weighted average. That is called weighted average, which is moving weighted average. So here if I do a moving weighted average, for example, again there is a purchase. We purchase fresh goods on 20th of January of 25. Let us say 100 units at, let us say, again 50. So total is 5,000. So in moving average, what happens is 6750 plus 5,000, 11,750 total value. Quantity 250. So 11750 divided by 250. 11750 divided by 250, we get 47. So the rate becomes 47. Right. So moving average means after every inventory is sold and again a fresh inventory is purchased, we'll update the moving average rate. Whereas periodic moving average means for the entire period, I'll calculate a single weighted average. So if I do a periodic weighted average, I will take 5,000 plus 4,000, 9,000 plus another 5,000 and divide it by 300. That is what is called periodic weighted average. Okay. So we can use FIFO, we can use weighted average rate. Then we have standard cost. Now the standard cost is nothing but what you learn as standard costing. The company will predetermine a rate. Using that rate, they will value the inventory. The retail method means you will take selling price. You will take selling price, let us say 1,000. Whatever is the gross profit, let us say 20% is the gross profit. You will say minus 200. So 800 is the cost of inventory. Sir, why are you using this? When we have lots and lots of goods, right? Then what happens is you find it difficult to value inventory for each specific item. You go to a departmental store, something like, let's say, a D-Mart or any other departmental store. To calculate cost of each inventory becomes very difficult. Of course, we have computers which has made our work easier, but otherwise what you can do, total goods selling price is 1,000, average gross profit is 200, so this becomes my cost. So that is used in the retail basis, right? So FIFO, weighted average, standard cost, retail. Is LIFO allowed? Is LIFO allowed as per accounting standard 2? LIFO is not allowed as per accounting standard 2. So that is one thing again you have to keep in mind. Then very, very important, raw material valuation. This is almost tested. Whenever a inventory question comes, every alternate time this concept will be brought into picture. Raw material valuation is at cost only. Raw material valuation is at cost only. But if selling price will be less than cost, selling price of what? Finished goods. If selling price of finished goods is less than cost, then you will value it at replacement cost. You will value it at replacement cost. Now here, a lot of students have this theory that we will do cost, we'll always do replacement cost. That should not be the approach. What you should do is, if cost is 100, replacement cost is 120, you will still value it at 100 only. You will use replacement cost only if sorry, you will use replacement cost only if it is less than the cost. Meaning to say, if cost of raw material is 100, replacement cost is 120. This is the cost, this is the replacement cost. You will not say that I will value it at replacement cost. That is not the objective. And don't put the standard thing that I will use cost or replacement value, whichever is less. No. First you have to check selling price of finished goods is less than cost or not. First you will check selling price of finished goods is less than cost or not. That is the first thing you will check. Then, if it is less than cost, which means there is a decline in raw material price, which means we have to bring it down to NRV. We don't have NRV of raw materials, so you'll value it at replacement cost. But not at any point of time you should value it at over cost or more than cost. Meaning to say, cost is the minimum part. You cannot value inventory beyond cost. So cost, not minimum, sorry. Cost is the maximum. You cannot book profit just by valuing it at replacement cost. If selling price is greater than cost, value it at cost. So what are the scenarios? Raw material valuation, cost. If finished goods is sold at less than cost, you will check the replacement cost. If replacement cost is lower than cost, you will value it at replacement cost. Okay, this is one thing which keeps on coming. And Institute has got a habit of now testing some theoretical requirements as a part of your MCQs. Okay, so disclosures, accounting policies, carrying amount of inventory and carrying amount in the classification, raw material, work in progress, finished goods, stock in trade, stores, loose tools, others. So these are the various categories in which you will do the disclosures, right? So this sums up the entire concept of your inventory. Now what we'll do, we'll take up a couple of more questions and then we'll take up a question from past exam paper as well. So here, this is a question on normal loss and abnormal loss. Now what is normal loss? What is abnormal loss? Let me explain you the concept. Normal loss is something which happens because of the process itself. It is inbuilt in the process. So for example, if I take 100 kg of wheat for grinding, I may get 95 kgs of wheat flour or atta, what you call. Okay. If I take 100 kg, I'll get only 95 kg. Why? Because some part of the flour will, it will be spilled over as the process continues. Some part gets out with air. Some of them have a doubt that someone who runs the flour mill, he will keep some part with him. We don't know. Some part will be remained. It remains in the machine itself. So 95 kg is what you get. Ideally, you are expecting that this 5 kg is lost. This 5 kg is called normal loss. Means whatever you do, on an average, it can be different from case to case basis. 100 kgs, only I'll get 95 kgs output. This 5 kg is called normal loss. This 5 kg is called normal loss. The normal loss is included in the cost of inventory. Sir, what do you mean by that? Let us say this 100 kg costs me 5,000. 100 kg costs me 5,000. But I'll get only 95 kg. So what I will do, 5,000, I will use only 95 as the denominator. So my per unit cost will be 5,000 divided by 95. That is 52.63. Here it was 50. The 500 of this 250 of this normal loss, I will absorb. But I'll absorb it with the good units. In other words, the good units will absorb the normal loss. The good units will absorb the normal loss. So what I'll do? I will take the total quantity minus normal loss 5. This is the expected quantity. So total cost of raw material divided by expected quantity will give me cost per unit. Will give me cost per unit. This cost per unit I will consider while valuing inventory. That is the first thing. Sir, what if we get only 90 or 92? Let us say I gave 100 kgs. I got only 92 kgs, which means there is a loss of 8. This 8 I will split between normal and abnormal. Normal 5 kgs, abnormal 3 kgs. Normal cost will be absorbed by finished goods. Abnormal will be written off to P&L. So right now we'll do one question based on this. Very important, mark it as important for your examination point of view, and that will actually help you understand how to handle these type of questions in the examination. In a production process, normal waste is 5%. Now, what is the meaning of normal waste? If I give 5,000 metric ton of input, there is a 5% loss. So, 5,000 into 5%, 250 is lost. 250 is lost. Means I will get 4,750 of normal good output. I'll get 4,750 of normal good output. Right? So, input was put in process resulting in wastage of 300. Oh, so I put 5,000. I am expecting 250 of loss. Actual loss is 300. Means what? 250 is normal loss. 50 is my abnormal loss. The cost per metric ton of input is 1,000. Entire quantity of waste is in stock at year end. With reference to accounting standard, how will you value the inventory? Please remember, abnormal items will be excluded while valuing inventory. Selling and distribution cost will be excluded while valuing inventory. Administrative overhead will be excluded while valuing inventory. So abnormal loss will also be excluded, right? Now, total cost, what they have said is per metric ton is 1,000. So total cost is 1,000 into 5,000, 50 lakhs. In this 50 lakhs, I'll get 4,750 of good output or normal output. This is a normal output. So what is the output per unit? 50 lakhs divided by 4750, 1052.63. This is my normal cost. This is my normal cost per unit. What is the inventory? 4,700. Sir, why is it only 4,700? See, we got only 4,700 of output, right? So inventory valuation will be 4,700 into 1052.63. That is how I'll value the inventory. So then what about that 50 of loss? That 50 of loss at the same cost 52632 will be charged off to P&L. Will be charged off to P&L. Now if you do this 4947 plus 52, this put together you will get a total of 50 lakhs. So normal loss will be absorbed by all the units. That is the output produced. Any abnormal loss will be written off to P&L. Now here I want you to remember the steps that you should follow. First, calculate the normal wastage. Check what is the actual wastage. There is an abnormal. There can be an abnormal gain also. Both things are possible. Okay. Total cost will be divided by expected output. Means whatever is the input minus normal loss. That you will use to calculate the per unit. With this per unit, you will calculate cost of inventory that is in hand, and you will calculate cost of abnormal loss, which has to be written off to P&L. Okay. So this is also an important question which you have to mark it. Then there are some theory questions. You please have a look at and complete all the questions. There are these theory questions based on the concepts you can revise, and the questions which I have not discussed in the class, right? Those questions also you should practice, and also the RTP MTP questions which I will be discussing. So here again, so this is again homework question. You can do it. This is a past exam question again. It has been tested a couple of times, so you can have a look at it. Yeah. This is again very important, where we will talk about raw material valuation, right? A Limited is engaged in manufacturing of chemical Y for which raw material X is required. The company provides you with the following information for the year ended 31st March. Cost 380, freight inwards 40, unloading charges, replacement cost. Chemical Y, material consumed 440, labor 120, overhead 50. So what is they doing? What are they doing? Manufacturing chemical Y for which raw material X is required, right? Now, raw material X, if you see, cost is 380 plus unloading charges 20 plus freight inward 40. So, cost is 440. This 440 is what they have given here. Okay. Then, replacement cost is 300. So, these are two numbers. This is cost. This is replacement cost, right? Okay. Chemical Y, what is the cost? Cost is 440, that is material, plus direct labor 120, overheads 80, variable. Then fixed overhead for the year was 4 lakh on a normal capacity of 20,000. So 4 lakh divided by 20,000, 20 per unit. So we'll include that 20 also here. Closing balance of raw material was 1,000 and chemical was 2,400 unit. Now they have not told us whether the actual production was more or less. So we'll assume it is as planned. So the cost is 440 plus 120, 560, 560 plus 100, 660. So you can see chemical Y 440 plus 120 plus 80 plus 20, 660. Material 440, we have already calculated. Now, calculate the value of closing stock of material and chemical Y as per AS2 if the NRV of chemical Y is 800. If NRV is 800, means we are selling it over cost. Cost on net realizable value, whichever is less. So, we will take at 660 into 2400 into 2400. And raw material will be 440 into 1000. Now please remember, when they ask the total inventory, you should calculate fully. Raw material 1000 into 440, 2400 into 660, this is the total value. You have to calculate fully. Don't leave here, or don't leave just at 440 and 660. You have to calculate it fully. Only then you will get full marks. Then if NRV is 600, if NRV is 600 means what? The raw material, there is a fall in the price, finished goods is being sold at less than cost. In that case, you have to see if there is a reduction in value of raw material. Replacement cost, they have said, is 300. So, in that case, you will bring it down to 300. Raw material will be at 300 and chemical Y will be at NRV. This will be at replacement cost, right? Which will be 17 lakhs 40,000. Okay. So, this is a past exam question, right? What I'll also do is I'll just share the. Just give me a minute. This compiler also you can download it from the resources section. Okay, and those of you who have enrolled, that is already it will be added to your course section. From there also you can download. So now here you can see, so for example, this was asked in May 24, right? Company engaged in production of polyester and nylon. The main product, a byproduct fiber F is produced. Details of the things are given. Same thing what you have done. MP1, MP2, similar question, and you can see 800 on sale of byproduct after incurring packing charges and all of that. Everything is same. Just they have changed the name and they have given it to you. 7 marks question. And tell me one thing, if you have practiced it properly, is it not possible to score those 7 marks? Do you think it is possible to score 7 out of 7? And see, these are the questions. These are the questions where you do not lose marks. These are the questions where you can score out of out. I'll tell you, you can score 7 out of 7 if you are able to solve it. Sir, this takes more time. Baba, if it takes more time also, if you get 7 marks or 6 marks out of your 60, 90%, 10% target is done. That is how you have to think of it. Okay. See this 5 marks question on wastage, what we have just now discussed, right? Very simple question. See, 800 units of material purchased at 140, replacement cost is 190. 650 of part to finished goods in process producing X, cost incurred 310. These units can be finished by incurring additional cost. Already saw a question like this. 1800 units of X, total cost incurred is 360. Expected selling price of the product is 350. Determine how each item of inventory will be valued. Calculate the total value of inventory. Again, very straightforward question which you can do. Now here in this first part, replacement cost is 190. Whatever information is given, I cannot value it at more than cost. So you will do as it is itself. This question also, this is an important question as far as the conceptual testing is concerned, which you need to practice. Okay, and of course you can do the past RTP questions. A lot of these, again, as I told you, are similar. See, this just now we did, right? November 2018 question. This is a past exam question. Just now we did that question. Okay. So my idea is, if you're clear with the concepts, whatever we have discussed, and if you are able to implement the practice part of it, this is one chapter I tell you, whenever a question has been tested, students have either scored 0 to 2 or 5 to 7. If you know the concepts, you can easily score 5 to 7, and that should be the objective. Okay. So today, being the first day, we'll conclude here with Accounting Standard 2. Tomorrow we'll continue with Accounting Standard 10 on property, plant and equipment. Please practice whatever you have done. Please revise, practice a couple of questions which will add up or boost your confidence. If you want me to solve any specific question tomorrow in the class, you can definitely ask me. I'll be more than happy to do that in the class. Right? Thanks a lot for joining in. I hope it was clear. If it was helpful, do let me know in the comments section so that we get a clear idea of whether it has been actually helpful to you guys or not. Okay, so see you tomorrow. Tomorrow also we'll have the classes streamed on YouTube. You can join in at 10 o'clock. You can let your friends know, and those of you who want to enroll for the full-fledged class, you can check the buy courses option on our portal. Okay, thanks a lot. See you tomorrow.